on Business Incorporated today. Zimbabwe government bars unvaccinated civil servants from work. New law in Ivory Coast bans exports of raw rubber. Nigeria's consumer price index drops to 17.01% in August 2021. Hello and welcome to the program. I'm Ini John Mekwa. Well, as usual, let's start with intraday markets here on African continent. There was a lot of negative sentiment as intraday on the continent. Though bullish yesterday, the Nigeria index was flat as intraday, and it seemed on its way to the red zone, but that would be confirmed in a couple of hours. Johannesburg Stock Exchange of South Africa was deeply in the red, almost 0.5%. Egypt's GX30 was in the same zone, down 0.28%. While Kenya's all-share index shed marginally 0.04% at the close of trade yesterday. Well, here in Nigeria, talking about the African continent, the consumer price index, which measures inflation, dropped again by 0.37% to 17.01% year-on-year last month from 7.38% recorded in July. And that's the 5th consecutive month of decline this year. According to the data released by the National Bureau of Statistics, the composite food index also dropped to 20.30% against 21.03% in July. At the same time, the country's urban inflation rate fell to 17.59% year-on-year from 18.01% recorded 2 months ago. Rural inflation rate tapered to 16.43%, a previous 16.75%. Well, we'll go back to the markets now. In the Middle East, majority of investors in the Middle East displayed positive sentiments at intraday. Abu Dhabi and Dubai were bullish, while Abu Dhabi gained 0.80%. Dubai's financial market gained 0.15%. Elsewhere, both Saudi Arabia gained 0.12% and Qatari index lost 0.17%. Well, still talking about the market, the Pan-European Stock 600 hovered fractionally below the flat line in early trade today, with travel and leisure stocks sliding 1.1% to lead losses, while oil and gas stocks added 0.6%. We have details from Conrad, who's joining us from Frankfurt. Hello, Conrad. Good afternoon.
Good afternoon, Ini. Thanks for having me back.
Good to have you back. Well, today our conversation in Nigeria is about consumer prices index, but yesterday was for the U.S., an annual rate of 5.3% in August. And the development between June and August this year points to a slowdown of consumer price inflation. Well, how are investors reacting to that? Which side are they taking, the negative or the positive side?
The positive side, Ini, of course, 5.3% consumer price increase, that's quite significant, but it's also a sign of a strong dynamic economy. Higher prices means higher demand for goods and services. And you mentioned the slowdown over the summer months. If we look at this, from June to July, consumer prices increased by 0.5%, from July to August, 0.3%. So a clear slowdown and an indicator that the theory is right, that the price increases we are seeing right now are temporary, that they are not going to last forever.
Well, we hope to say that about Nigeria. Also, Microsoft has reported a strong turnover and profits with its cloud business. How much of this profit will spill over to the investors?
Quite a significant profit. Microsoft has announced that it will increase the dividend payments to its investors by 11%. And what's more, Microsoft plans a huge share buyback. Over the next few years, the company wants to buy back its own shares for up to $60 billion US dollars. That's, of course, a step designed to drive the share price further upwards and please investors. Of course, one could say, what a pity that Microsoft doesn't come up with other ideas how to spend the money. It could invest money in future technologies. It could take over young, innovative companies that have promising business models. Well, on the other side, if Microsoft does not identify targets like this, then one has to say share buybacks are at least the second best solution what to do with the money.
Well, we're talking about IPO again. Babel, which is a Berlin-based company, is organizes online language courses and is planning to go public. How are investors' sentiment towards them?
Well, they are pretty positive. The price range that was identified by Bubble in cooperation with the investment banks is 24 to 28 euros per share, which means up until September 22nd, investors can say that they are willing to buy the share within this price range. It's considered a decent price range, a fair one. The valuation of the company would be 1.26 billion euros. Not long ago, an American competitor of Bubble, Duolingo, went public. This was a quite significantly larger IPO, valued at $6.5 billion. Even though our IPO here, Bubble, is smaller than the American one, people here are happy that it's happening, and they consider the pricing to be decent and fair.
Okay, good for them. And we wish them the best as they go public. Well, thank you so much, Conrad. We'll talk to you again tomorrow.
See you.
So moving to the UK now, inflation hit highest figure in almost a decade. The Statistics Office said that higher prices in transport, restaurants, hotels, and for food and drinks pushed up the consumer price index. We have Juliana joining us from our London studio to give us details and, of course, reactions to this. Hello, Juliana. Good afternoon.
Good afternoon, Ine.
So following the inflation figures, the Statistics Office noted that in August 2020, that was last year, many prices in restaurants and cafes were discounted. But now the picture is very different, and I guess this is connected to the supply chain disruption.
Absolutely, Innie. Eat out to help out is certainly going to be one of the terms that goes down in Britain's pandemic history, because that's what people were doing between Monday to Wednesday. Thousands of restaurants were offering huge discounts, as well as the VAT cut, to try and get customers back into their doors. This was the time when the first lockdown was lifted, and it was a very, very good scheme. But of course, if you fast forward 12 months to today, those figures released from the Office for National Statistics are being compared to last August, which is why we saw a rise of 3.2%. That is a massive figure. As you said, this is the highest rise in inflation since 2012, and it is causing some concern. Yes, lots of central bank governors, particularly the Bank of England British Governor Andrew Bailey, they have been saying that these are transitory, but it is going to provide much food for thought when the Monetary Policy Committee meet next week, Thursday. At last month's meeting, 4 of the 9 MPC members were talking about perhaps raising interest rates. So we are going to have to wait and see what happens. But yes, these prices are being seen. They're being felt by the consumer. This time yesterday, we did speak about supermarkets. They've been raising their prices. As you said, it's got a lot to do with global shortages from across the world, but certainly much to do closer to home.
And how is the market reacting to the inflation figures at this time?
Oh, well, the FTSE is slightly in the red. Well, the all-share is slightly higher, actually, at intraday. Lots of this has got to do with the benchmark price for Brent crude oil. That's pushed the oil majors higher. The likes of BP and Shell are trading in positive territory. But as soon as the Office for National Statistics released this data early this morning, the FTSE 100 was pushed lower. So at intraday, the all-share is currently down by about 0.02%. The FTSE 100 up, though, by 0.08%. And the FTSE 250 in the red at 0.37%. In the currencies market, the British pound is up against the US dollar by 0.12%, down against the euro by 0.09%, and also down against the Japanese yen by 0.28% at intraday.
Okay, and the Financial Conduct Authority has set out a plan and targets to tackle investment scams. Why is this coming up at this time?
Yeah, this is part of the Financial Conduct Authority's wider strategy to improve investment in the UK. It's actually worth about £1.6 trillion. It's estimated that over 1 million Brits have got about £10,000 invested in various schemes. And as we are coming out of this post-pandemic slump, they do want to attract more people in investing. But, of course, one of the big issues when it comes to investment is scams and dodgy deals. There have been so many notable corruptions over the past few years, and the FCA are really trying to crack down on that. So they've set out a plan that by 2025, as well as getting more people to invest their money, they also want to make more people aware of some of the difficulties. I think particularly the elderly, I believe £11 million is going to be put aside to make sure that there are more campaigns telling people to be careful about dodgy schemes, advising people on where they can invest their money, especially because, according to the Bank of England, there's over £1 billion worth of money settled in people's back pockets, any money that wasn't spent during the pandemic, and they'd rather it go back into British companies.
Thank you so much, Juliana, and enjoy the rest of your day.
Thanks, Ine.
So let's go to the U.S. now. U.S. stock futures were mildly higher in early morning trading after the Dow Jones Industrial Average dropped nearly 300 points on Tuesday. Well, we have details of how the market went yesterday. Our correspondent in the United States, Mario Bird, tells us about that.
Stocks ended lower on Tuesday to wipe out earlier gains as traders digested a new print on consumer inflation, which showed a slightly slower increase in prices last month. The S&P 500, Dow, and NASDAQ each dropped after opening in the green. The earlier move to the upside came after the Labor Department released its August Consumer Price Index report, which showed a still heightened level of inflation across consumer goods and services, but a pullback from recent multi-year highs. The core measure of CPI, which strips out volatile food and energy prices, slowed more than expected to come in at 4% year over year in August, after growing 4.3% in July. Consensus economists were looking for CPI, excluding food and energy prices, to rise by 4.2%. The inflation data suggested the persistent price pressures rippling across the recovering economy were beginning to slowly unwind, though the CPI reports remain elevated relative to pre-pandemic levels. Wednesday is the final day of the SALT conference in New York City. In terms of economic data, U.S. import and export prices and mortgage application data are scheduled to be released on Wednesday.
All right, now just before we go on break, let's see what's happening in Zimbabwe. News says that all civil servants must now be vaccinated against COVID-19 before being allowed to report for duty after being given time to get their jabs, while churches are now permitted to move from 100 people at a service to half their capacity if congregants are fully vaccinated. So now let's find out how that's working in Zimbabwe. And if the private sector especially are joining in, we have George Msumba, a senior reporter with Star FM, joining us from Harare. Good to speak with you, George. Good afternoon.
Good afternoon. Thank you very much for having me.
Good to see you. I guess the first thing would have been, are you vaccinated? But let's leave that and say, how is it going, this no vaccination, no work for the civil servants? How are they implementing it, and how is it affecting, especially the private sector?
Yes, just for your own information, yes, I'm fully vaccinated. The 2 shots, I got my vaccination early when the program was rolled out. For the private sector, they were the first ones to make a move to say, look, if all employees who are going to come to the premises must be vaccinated. I know that the largest labor movement has taken that issue to court, but it has been struck down, and they say no, there is no agency in hearing that matter at the moment. So it is still going to go through the courts, but not on an agent basis. So the private sector had already made the move to say, look, people get vaccinated if you are going to come to the workplace. If not, you take your leave days and so forth. The government has followed suit to say all civil servants must get vaccinated. So there has been a scramble to go and get vaccinated. The vaccines are actually available, and they come with the rollout for this past week. We are looking at about 2 million doses which came through over the weekend. They keep on coming. The vaccines, it's not an excuse to say they are not there. They are there. But the issue is some people have been reluctant to just get vaccinated. You know, we have a problem where misinformation is put through on various platforms. So some people were reluctant. But when we were hit with the third wave, we are just coming out of a third wave now. Shops are opening up, businesses are opening up. A lot of people now started to scramble for the vaccines. So I suppose because the numbers have receded, the people also become complacent. So that is the current position.
All right, George, thank you so much. We'll certainly be following up to see, the scramble for the vaccine. And good to know, like you said, that it is available. And we do hope we'll see more response. Thank you so much, George, and enjoy the rest of your day.
Thank you very much.
So we'll take a break. When we come back, we'll look at African stationery markets. Did you know that's a booming market? Well, join us for that after the break. This is Business Incorporated on Channels Television. Yeah, welcome back. Dubai has emerged as a key export gateway for stationery goods, which are in spiraling demand throughout Africa. A new report by Market Information Advisory, GW Research, forecasts the continent's stationery consumption will reach a value of $5.04 billion by 2027, growing at a compound average growth rate of 2.4% annually from its current $4.39 billion valuation. Education, though, represents 60% of overall sector demand in Africa. And though the COVID-19 pandemic has slowed demand with schools being forced to close, the report believes the sector will rebound by the end of this year. Well, we have proponent of the report represented by Mr. Ali Akbar, who is the show director of Paper World Middle East exhibition, to tell us how they got to these figures and why they have interest in this. Good to speak to you, Mr. Akbar. Good afternoon.
Good afternoon. Thank you very much for this opportunity. Paper World Middle East is actually one of the largest exhibitions, which holds almost 300 companies from 40 plus countries in the Middle East. The exhibition takes place in Dubai and this year it will take place from 14th to the 16th of December.
Okay, so Mr. Akbar, we're just curious to know why your interest in African stationery market, because it doesn't seem like a very popular market, and yet you took interest and then you did a report on it. What drew your attention to that?
Yeah, Dubai is being actually the major re-export hub, and we've seen all over the years that a lot of African buyers are, coming and sourcing variety of stationery products from Dubai. Now, there are multiple reasons behind it. One of them would be that Dubai is accessible, easily for all. Then the variety of products that you get with very, less number of minimum order quantity. Apart from that, you'll get access to major brands. Obviously, it could be from Asia, from Europe and stuff. And then on the top of that, easy logistics and shipping lines that basically, contributes to the overall shipments being delivered easily to African countries. Having said that, obviously, these factors contributes to high demand. for distributors and retailers of African market. And that's the reason the market is very lucrative for them. And over the years in our exhibition, we have seen that the African buyers, the presence of African buyers are tremendously increasing, year by year. But so since it's a long absence.
Okay.
Yeah.
So which countries are most active from your report? Which countries are most active in these transactions you're talking about?
We've seen traction from, obviously, from Ethiopia, from Nigeria, Egypt, as a matter of fact. South Africa is showing a promising kind of like growth in terms of both exhibitors and visitors coming here to source as well as showcase their products. I think these are the dominant region. Apart from that, some emerging markets like Democratic Republic of Congo, Sierra Leone, and I would say that some more West African countries, Morocco, yep, that's what it is.
Okay, so how can countries on the continent, at this time, nations are looking for how to maximize whatever platform they can get. How can countries on this continent maximize these trade relations in spite of the restrictions? For instance, there's a restriction between the travel between Nigeria and Dubai, So how can, in spite of all of this, countries maximize this platform, an opportunity that the stationery market presents?
Absolutely. So, in our exhibition, we are going hybrid this year. So if due to travel uncertainties, a potential buyer wouldn't be able to travel to the show, then they could log into our online platforms and they will get access to all the exhibitors showcasing their products. They can obviously connect, network, communicate with them through our virtual tools. Apart from that, I think there's a reasonable kind of, sense that the travel would resume in next couple of months. The show is lined up in December from 14th to the 16th, as I said. So we are hopeful that it will, the buyers from Nigeria will have access to the Dubai market by then.
Okay, we hope so too. Thank you so much, Mr. Ali Akbar, Show Director of Paper World Middle East Exhibition, and enjoy the rest of your day.
Pleasure.
Moving on now, Ivory Coast Parliament has approved a new law that all rubber produced in the country will have to be processed before being exported. Members of the Parliament have stressed the need to go for added value, which will help build a strong, prosperous country where all will benefit from economic growth and fallout. Prior to this law, only 50% of the country's rubber was being processed before shipment into the world market. Ivory Coast is Africa's biggest rubber producer and ranks as the world's fourth biggest grower of the crop. Kenya is establishing a fill and finish facility for COVID-19 vaccines ahead of setting up a full-scale manufacturing plant to guarantee supply. According to the country's national COVID-19 vaccine deployment plan, the aim is to start local production during the first quarter of 2022 and have a fully fledged human vaccine manufacturing capability by 2024. And Dubai Gold and Commodities Exchange and Zambia's copper production dropped 4% in the first 6 months of the year, as some miners in Africa's second largest producer of the industrial metal struggled with operational disruptions. January to June production fell 393,114 metric tons from 407,807 tons produced in the same period last year. The production drop dampens Zambia's prospect of raising copper output above 900,000 tons this year. Global copper prices hit multi-year highs in May as the global economy began to recover from the pandemic hit, but have since been retreating. Zambia, which became Africa's first pandemic-era sovereign defaulter last year, tripled its trade balance to $1.9 billion from January to May, boosted by higher copper prices. Somalia's economy is rebounding from the triple shock that ravaged the country in 2020. The COVID-19 pandemic, extreme flooding, and locust infestation. Those were the three triple shocks that the country faced last year. Real GDP growth is projected at 2.4% in 2021. This growth momentum is expected to continue in the medium term and reach pre-COVID-19 levels of 3.2% in 2023. The latest World Bank Somalia Economic Update reports that economy contracted by 0.4% in 2020, less severe than the 1.5% contraction projected at the onset of the global pandemic. Higher than anticipated aid flows, fiscal policy measures put in place by the federal government of Somalia to aid businesses, social protection measures to cushion vulnerable households, and higher than expected remittance inflows mitigated the adverse effect of the triple shock. Well, that's it on the program today. Thank you so much for watching. I'm Ini John Mekwa.